2026, I do think we could see incredible growth. Again, I just can't underestimate the legitimacy that the entire sector gets when you have these big bulge bracket firms coming into the space, offering their own products, developing their own crypto strategies. When you've got BlackRock, I think on stage at Davos talking about tokenization. I mean, it's just remarkable. The environment is easier. And not just in the US, it's easier to operate globally.
It's a great pleasure to welcome to the show Noah Perlman. He's the Chief Compliance Officer at Binance. Previously, he served as the CCO and COO at Gemini Trust Company, former Managing Director and Global Head of Financial Crimes at Morgan Stanley, and he's also held prior roles as Assistant U.S. Attorney and DEA Division Counsel. So we're going to find out what is next for Binance on the regulatory front. What is Binance planning to do in terms of working with U.S. legislators on potentially returning to the U.S. We'll get to that in a minute. And broadly speaking, the major trends in crypto that Binance, being the world's largest exchange, is trying to work for. Welcome back, or welcome to the show. No, it feels like we've known each other forever already.
Yeah.
This is your first time, and hopefully not the last.
I hope so. David, thank you so much for having me on. Really, really nice to be here.
Well, thank you for joining the program. I think before we get into the nitty-gritty details of the compliance issues that Binance is facing right now, let's just get to the heart of the business strategy today. Fundamentally, how are exchanges, not just Binance, but how are exchanges today different in terms of what they're operating with a few years ago? And what I mean by that is, Noah, exchanges started at a time when retail investors dominated the crypto space. That narrative has flipped 180 degrees in the last year and a half, with institutions now dominating the crypto space. I was just reading a report not too long ago that I think 50% of global hedge funds surveyed held at least 7% of their portfolio in crypto. This was an unprecedented number, wouldn't have been possible 5 years ago. And Bitcoin has evolved from from something you used to buy pizza with, which is his first transaction, to something that governments hold in reserve, that large treasury companies hold in reserve, and institutions hold in reserve as a treasury asset. So given these evolutions in the crypto space, how is Binance evolving as well?
Yeah, David, you're spot on. And I like to tell a story about sort of my own evolution. When I was at Morgan Stanley, one of the committees I sat on, and traditional finance institutions, they love their committees. So I sat on a subcommittee that evaluated digital asset opportunities that were coming to the firm. And this is probably going back about 7 years ago. And at that time, we had a lot of smart people at Morgan Stanley, state the obvious, a lot of people interested in digital assets and the possibilities. But at that time, my recollection was there wasn't a single opportunity that came to that committee, at least, where we said, you know what, this makes sense for Morgan Stanley at this time to pursue. Flash forward, a really relatively brief period of time, and you have Morgan Stanley launching its own Bitcoin ETF. You have exposure of not just Morgan Stanley, but all the traditional banks, as you said. Incredible exposure to digital assets. It's been an incredible turnaround. So I really do see, and Binance sees 2026 as sort of continuing this, what I'd say, new phase of maturity. Deeper integration with the global financial system. Bitcoin ownership is really shifting from retail to institutions. Exchange held BTC, I think, is at a 5-year low, with institutional holding rising. And so what this all signals is reduced volatility, more stable market cycles. It starts to look like what you see in more traditional finance. At some point, I think even that nomenclature will start to disappear. We won't call it traditional finance anymore. It's all just finance.
Well, is Binance still trying to stay in the lane of the retail investor, or are they trying to move now to take the business of the Morgan Stanleys of the world? I understand that the Morgan Stanleys of the world have their own custodians, but maybe they might look into something like Binance.
Yeah, look, I think as the largest exchange and with the deepest liquidity, I think it is natural for institutions and retail alike to look to us for possible solutions to issues that they're trying to solve. Part of what our leadership has built, in addition to just incredible products and this deep liquidity, but by focusing on compliance, on regulation, it creates a platform that will be comfortable for sort of more traditional institutions, governments to interact with. Nobody in the sort of traditional finance world or regulations is going to want to operate and partner with a shop that isn't completely buttoned up. And so we have done that over the last 3+ years. Our licensing is a testament to it. Our investments in compliance are a testament to that. So we certainly will be a favorite destination and partner to folks looking for that deep liquidity.
Okay, well, let's just get to the number one issue that maybe my U.S. investor audience is watching and paying attention to right now, which is the issue of whether or not Binance is returning to the U.S. anytime soon. Here's an article from CNBC. I know that CEO Richard Tang was at the World Economic Forum in Davos. Speaking to CNBC, he said that Binance is waiting and seeing on re-entering the U.S. So Ripple CEO predicted Binance would re-enter the U.S. as the crypto exchange's co-CEO said it would adopt a wait-and-see approach. And then, in an interview with CNBC in Davos, Binance's co-CEO Richard Tang said it was taking a wait-and-see approach to re-enter the U.S., which he called a very important marketplace. I think that goes without saying. What is Binance waiting and seeing for? What regulatory clarity do you still need to pull the trigger?
So look, I'm not going to... Certainly not going to have a different message than my boss, CEO. So sort of would reiterate, it's a bit premature, at least from where I'm sitting, to discuss reentry in the U.S. But I would say, and I sit in the U.S., that it really is truly inspiring to see just the incredible momentum behind sort of the re-energized U.S. crypto movement. Under both the new administration and Congress. Obviously we're not quite there with the Clarity Act, but we're on the way. And just look, markets love, and sort of my position has always been on whether it's MiCA in Europe, Clarity Act, Genius Act, that these things are a starting point. And obviously, we want to get the regulation correct, but we need some roadmap to start with. And so I think it's pretty exciting what's going on in the U.S. in terms of the pivot, more open to crypto. Does that create better circumstances to re-enter? Perhaps, but again, I'll sort of echo the messages that our CEO said in Davos, which is it's still a bit premature, and we're going to see how this next year develops.
Right. Let me just ask you point blank then. Do you think it's easier to operate in the U.S. today than it would have been 3 years ago?
Look, and I'll answer this question just to be clear, independent of sort of Binance. I do think it is, I think sort of my impression, having been in this space directly for, now 6+ years, is that the environment is easier. And not just in the US, I would actually argue that it's easier, look, we've got a global platform, that it's easier to operate globally. And the US maybe even more so. And let me sort of dive into that a bit. Part of the challenge of operating crypto in a sort of, if you want to do it in a regulated way, is making sure that you've got regulators and lawmakers who are open-minded about the industry and about the space. And when I say open-minded, that doesn't mean turning a blind eye to regulation, but it means coming with sort of the facts as opposed to a preconceived notion that, crypto is only used by criminals. It's only used by money launderers. As I'm sure listeners and viewers of your program will know, crypto is actually an exceedingly bad way to launder money, given the traceability, the immutability, et cetera. So, and what we've seen, I've been dealing with regulators, auditors, et cetera, for 6+ years, is you've seen a real evolution in terms of the expertise of regulators, which is not surprising. We've all got more expertise as the industry matures, but certainly I find myself sitting across from men and women who on occasion are incredibly savvy, incredibly technically experienced. And so that's really who you want helping sort of regulate, audit, et cetera, because, as opposed to folks coming in. So it may be a little bit of a long-winded answer, David, but I do think it is easier to operate in the U.S. Obviously, we don't operate in the U.S. yet, but anecdotally, talking to some of my peers at other firms, I believe that the environment is much easier to operate in.
Let's just take Binance as an entity and how regulations may change going forward. So we're looking at Binance being the world's largest exchange. Do you expect that Binance in the future would still be regulated as a crypto exchange or a traditional finance platform, market maker, or exchange like a NASDAQ, except for crypto, for example? And I know the two are very distinct. They operate with different rules. For example, what would be normal in crypto would be to provide liquidity for some newer listings. There's some tighter regulations around that for a traditional exchange. How would Binance navigate this if the regulations were to change?
Yeah, that's a great question. And unfortunately, I don't have a great answer for that, because a little bit of this is to see how it develops. But what I will say is, I do think that this sort of fine line between being regulated as a crypto exchange or virtual asset service provider, VASP, versus traditional finance, I think that those boundaries will start to melt. And certainly for the big players, such as us, and there are others who are providing increasingly a number of financial solutions to both individuals and institutions alike. And so I think we'll start to evolve towards, again, being sort of treated. Again, it's a prediction. It may be too early to say, but the distinctions will start to fade away, and it's just sort of it's a financial services platform.
I want to show you a little clip from Davos. This is Larry Fink on a panel with Griffith from Citadel. Take a listen.
I think the movement towards tokenization, decimalization is necessary. It's ironic that we see two emerging countries leading the world in decimalization, in the tokenization and digitization of their currency. That's Brazil and India. I think we need to move very rapidly to doing that. We would be reducing fees. We would do more democratization by reducing more fees if we had all investments on a tokenized platform that you could move from a tokenized money market fund to equities and bonds and back and forth. We have one common blockchain. We can reduce corruption. So I would argue that yes, we have more dependencies on maybe one blockchain, which we could all talk about. But that being said, the activities are probably processed and more secure than ever.
BlackRock is preparing for a world in which trillions of dollars of financial assets, securities, and hard assets are tokenized on the blockchain. How is Binance preparing for this world?
Yeah, no, look, I love hearing that, because that's sort of music to my ears, our ears, because certainly for those of us in the space at Binance, we believe all of those use cases ultimately serve the user better. This idea of reducing fees, reducing rent-seeking behavior, more frictionless transactions. So we're preparing, not specifically, but more generally in terms of constant investments into our security, our regulation, the stability of our platform. I'm not sure. I don't think we spoke on while we were on air yet, but the massive size of Binance makes us almost uniquely positioned to sort of evolve seamlessly into this new world. I mean, we crossed 300 million users last month. On the regulatory front, I believe we are the most regulated exchange. We've got 21 local licenses. And of course, the big news towards the end of the last year, we're the first global exchange to secured a global license from ADGM, pretty significant. And I talked about the liquidity. In 2025, $34 trillion traded on the platform, and all-time traded volume now is 145 trillion across all products. So I say those stats a little bit to brag, but also a little bit to put into context the fact that as Larry Fink said, as we evolve into this potential where more and more assets are traded, tokenized on chain, we are making sure that we've got the infrastructure built to support it through constant investments. I'll give you sort of another stat, which makes me the envy of my chief compliance officer peers throughout the space. We have at Binance, I have in compliance more than 100 engineers, so not compliance professionals, but tech engineers just devoted to solving compliance problems, making sure that we are the most effective and efficient that we can be using sort of tech solutions. So that type of investment. So these are incredible engineers who are not a shared resource. I don't have to go to this chief technical officer and say, "Oh, can I borrow some engineers? I have a problem I want to fix." These are actual engineers devoted to compliance problems. So it's just an example of the type of investment that we make. And why do we do it? Obviously it's the right thing to do to have a compliant program, but we actually also believe it is a commercial advantage, a competitive advantage to have compliance that's effective, efficient, that's sort of friction-free. And so that's part of what we are preparing for in terms of making sure the infrastructure is built for purpose.
Just on a compliance note, several of my peers have referred to Binance as there's old Binance and then there's new Binance. So pre-2023 was old Binance, post-2023 is new Binance. You're smiling, you know where I'm going with this. Why is new Binance different from old Binance from a purely compliance and regulatory framework perspective?
Yeah, well, I'm smiling in part because you picked 2023, which is great because that's when I joined. But the truth,
it was all Noah Perlman. That's why.
No, I like that. But the truth is actually it's a journey that began before me.
Sure.
It certainly is. And look, I really do think that look, people may disagree, but I actually really do. I've been here now 3+ years. I actually think, based on sort of what I've observed historically and since I've been here, look, there's a narrative that Binance was out to do, not compliant, really wanted to break the rules. I really don't. I have a deep commitment and conviction that that's really not what happened here. I think what happened here is prior to 2023. There just wasn't really a focus. There wasn't attention paid to compliance. You have a company that's built by incredibly brilliant traders, engineers, crypto enthusiasts who just weren't focused on compliance and regulation. And that's not an excuse. I mean, they should have been, but they weren't. And in a sense, the success got way ahead of them. And then fairly quickly, there was a pivot to make sure that the rules were being adhered to. And unfortunately, that pivot happened, after a certain number of years. And again, just given the scale, some of the problems just needed to be remediated in a significant way. And certainly since I've been here, and as I said, I really do think the journey begins even before I'm here. There's been a commitment to doing things best in class, the absolute right way. And look, talk is cheap. You can sort of say that, but what is not cheap is actually the investment. The literally hundreds of millions of dollars we spend on compliance each year. The headcount here, I think the most recent, it changes all the time, but well over 1,000 of our personnel devoted to compliance functions. That includes full-time compliance employees, which is well over 600. The engineers, other functions as well. So it's pretty dramatic in terms of the investment here. And so, new and old, maybe that makes sense. I'm not going to quibble with that, but certainly the journey that we've been on here is one I'm really proud of, and that leadership continues to support and invest in.
Another major change in 2023, speaking as a Canadian, I'm interested in this. Binance was in Canada. It moved out of Canada in 2023. This is from Binance.com. Here's a big reason. I'll ask you what the reason is actually from your perspective. This article cites that Binance leaving Canada actually had a market impact, drag down Bitcoin. I'm not sure if that's true, but that's what the author said. Okay, so the reason why Binance abandoned this market is due to the tightening of new regulations. This immediately negatively impacted BTC's price, causing it to plummet to 25.90. Again, I'm not sure if that's the reason, but that's what the article said. Why did Canadian regulations become trickier to operate with? Let's put it that way. And where I'm going with this is, do you as a company also plan to return to Canada as well?
Yeah, so I'll give you, to the last part of that question, I'll give you another unsatisfying answer, which is we're still going to evaluate it.
Sure.
Look, I would take a little bit of, I don't want to sort of debate the article's premise, but when we decide to enter or exit markets, it's not necessarily because of the tightening of regulations or that we don't want to be regulated. We just have to evaluate what the regulatory requirements are and whether or not that's consistent with our business and the way we're set up. I mean, one of the things that I've learned operating globally, and as I mentioned before, 21 various licenses, I approach and the team approaches every market with a certain degree of humility. Even though we're the largest and we've got a lot of experience with licenses, if a jurisdiction has certain rules or requirements, it's not for us to say, oh, your rules or requirements are wrong. It's for us to evaluate whether or not we can operate in a compliant way, given the framework that regulator and regulations have set up, in a commercially, in a way not just as compliant, but that makes sense for our commercial goals at that particular time. And if it doesn't, we're not going to operate in contradiction to those rules. We're going to, we'll either comply or make a strategic decision to exit the market and maybe engage in conversations to return at another point. So that's really the story there. I mean, look, one thing that we do offer, again, with humility to any sort of regulator and governments around the world is the value of our expertise in terms of, look, we've seen markets around the world in terms of what works, what may work less well. To the extent governments want to engage in those conversations with us, we always want to do that.
Well, I can just tell you from personal experience, being a user of crypto in Canada, Canadian regulations are annoying. I don't mind just saying that on air. I just personally find them very annoying. Everything over $1,000 has to be tracked and reported on. Anyway, it's not the most user-friendly jurisdiction. I understand that, which leads to my next question, which is balancing user-friendly interfaces, shall we say, with regulatory compliance. As Binance becomes the leader of the exchange space in the world, certainly there's scrutiny from every jurisdiction that you operate in to not work with terrorists, to not fund illicit activities, to not support money laundering, so on and so forth. I get that. But on the other hand, by complying with these regulations, Binance and other exchanges are making it harder for people, or not harder, but lengthier for people and more difficult for people to on-ramp. And it's starting to feel like a bank every time I go on. I'm not going to name the exchange I use in Canada. Every time I go on and try to enter all my information every single time I make a trade, I may as well just use a bank. And part of the appeal of using a crypto exchange in the early days was how easy it was for people to just on-ramp. How do you balance that and I guess meeting regulatory requirements in the jurisdictions in which you operate?
Yeah, look, it's a great question. It's the biggest challenge that we face. And when I say we, compliance officers everywhere in crypto face this tension between user friction, compliance with regulation, and in particular, I think crypto creates, as you suggest, it creates almost a unique dynamic compared to traditional finance, in that the sort of whole promise of crypto, or I shouldn't say the whole, what one of the promises is, this decentralization, this frictionless experience. And so how we do it it's a huge challenge, but it's also the thing that's the most exciting. So, and when I say exciting, it's to try and get it right and to try and figure out solutions that keep users safe, but also keeps it frictionless. We try and do a lot of stuff behind the scenes. So let me give you sort of a type of example that we're experimenting with, right? So there is this concept of periodic review, and depending on the risk level of the user, every sort of 1 year, 3 years, 5 years, again, depending on the sort of profile, you have to refresh the KYC documents, the know your customer documents for that user. I mean, talk about a poor user experience. It's like you've been a customer or you've been a user of a platform, bank, whatever it may be, and all of a sudden, you're being asked for these questions again. And again, just even asking the questions, this is an aside. I mean, I totally get it. Just even asking questions, we try and have the language, sort of the tone that's most appropriate, but all of a sudden you can start feeling a little bit like somebody's accusing you of something. And so again, it is an experience that is on, one that we would like to soften. So we look at what we call, or some people call, silent due diligence. How much can we use in terms of open source databases, stuff that's available to us to really minimize the friction that faces the user. And of course, I'll say it again. I mean, hopefully it goes to saying everything we do, we want to make sure that it is compliant with the expectations and the regulations where we're working. And so part of that
please go ahead.
No, I was going to say, and part of that is also working with regulators in jurisdictions to help them be part of the solution as well. Because I should say, look, even though the way regulators and exchanges it's sometimes adversarial, or it seems that way, at the end of the day, hopefully everybody wants the same thing, which is safe environment, safe platform that benefits users.
This is a snapshot of Binance by the numbers. So it's interesting to me how Binance is still able to retain its position as the world's largest exchange, despite not operating in the Americas currently. So that speaks to the vast scope of crypto adoption worldwide outside North America. And so when you're looking at a stat like 18% plus 18% average daily trading volume across our products in the last year, which jurisdictions or countries around the world are you seeing, is Binance seeing the most adoption and change in adoption?
Yeah, so I mean, look, we're seeing adoption globally, and we're seeing markets continue to grow. And there isn't a single region that's not important to us. We've got incredible growth and commitment, to continue to grow the business globally. What I think sometimes is lost in the West, and maybe West is the wrong word. I think a better phrase is what's sometimes lost in countries and jurisdictions with historically low inflation rates, or countries that don't have a lot of sort of that don't have people that do a lot of international remittances, is the sort of the use cases, the real value. And here we're talking about maybe, payments through stable coins, for example. Certainly in the US, historically, there's been this narrative, what's the use case? What are you using the big crypto for, the Bitcoin? And you see in jurisdictions that have struggled with high inflation that, whether it's Bitcoin as a sort of store of value or stable coins, there's a real demand for it. Frictionless payments, remittances, lower fees. So in jurisdictions like that, you see incredible adoption and growth. And as we talked at the top of the show, I think that 2026 may be a real just institutional, the institutional adoption may cause this is not a prediction. I'm a compliance guy, not a trader, but I do think we could see incredible growth. Again, I just can't underestimate the sort of legitimacy that the entire sector gets when you have these big bulge bracket firms coming into the space, offering their own products, developing their own crypto strategies. When you've got BlackRock, I think on stage at Davos talking about tokenization. I mean, it's just remarkable.
So the altcoin market slowed down significantly in the last couple of months, all throughout 2025. Actually, Bitcoin underperformed the stock market. So, and like we discussed earlier in the interview, Bitcoin is becoming more institutionalized. So I'm wondering where the plus nearly 20% in trading volume is coming from in terms of what types of projects or cryptos or products on Binance that people are more interested in this year versus last.
Yeah, look, I think it's across. I think it's across the sort of product suite. Users continue to be attracted to products that offer either utility, community governance. We're seeing that across. I mean, while Bitcoin, and look, I think I remain a Bitcoin bull. I don't know if I'm a Bitcoin maxi. I don't even, some of these terms evolve over time, but I really do think that we'll continue to see, even though there might be some waxing and waning, Bitcoin will continue to be sort of, there's a core asset, and interest will continue to be there. So it'll be interesting to see how some of these projects continue to develop. Meme coins, just pivoting slightly to there, and we continue to offer a wide variety of coins. I know there's often contrary views about what coins are offered. My view has been, and it's not just been my view at Binance, it was my view at my prior exchange as well, is that we should offer, the exchanges should offer a safe, liquid way to buy and sell these assets once some vetting has been done. But in terms of sort of picking winners and losers, that's not really for the exchange to do. It's to provide a safe and secure way for users to explore projects. I mean, and so we list a lot. I'm proud of that listing process that we've got, and we'll see where the market takes us in 2026.
And then just to close off, in 2026, on regulatory changes, not just in the U.S. but worldwide, what are you most looking forward to?
So continued clarity. I mean, in the U.S., we talked about it before. I'd love to get some of these acts over the line. I'd like to see more clarity in other markets. Couple themes for us, specifically to us, with our new ADGM licenses. It's going to be. I'm excited.
Just to clarify for the audience, that's in Abu Dhabi.
Abu Dhabi Global Markets. I'm excited about that. Tier 1 regulator, in addition to sort of giving us, indication sort of our maturity, making sure that our relationship with them continues to be collaborative and that we're meeting all expectations. I have no doubt that we will. The other thing I'd love to see is a little bit more harmonization globally over regulation. One of the things that's challenging to operate is you've got different regulators who have different views on what products are acceptable and the requirements. And so, why can a user, in one jurisdiction, have access to, a perpetual swap, maybe somewhere else that's not allowed? And I realize each government and regulator is allowed to set their rules and have good reason for doing it. But hopefully we start to evolve towards more harmonization. And so we sort of have an accepted set of regulation rules governing the industry. I know that's not going to happen overnight, but hopefully 2026 we start to make continued inroads towards that goal.
Okay, great. Well, we'll follow closely what Binance has in store for us in 2026. Where can we stay up to date with the company's news, Noah, besides my program?
Yeah, no, look, we've got an incredible comms team, so there's no shortage of places. The Binance blog on the Binance website is a great source. We take a lot of time and care on those blogs, chock full of information, and then of course, our X feed is great as well, and our leaders, Richard, Yi, our co-CEOs are pretty active there as well, putting out some really interesting content.
Thanks very much, Noah. We'll put the links down below. Is there any place we can follow you, by the way?
Yeah, I'm on X and LinkedIn as well. I'm not as active or as creative as some others, but please feel free to follow me there.
Okay, and we'll put the links down there as well. So please make sure to follow Noah on X, LinkedIn. Thank you, Noah. Good to meet you, and we'll speak again soon. Take care for now.
Thanks so much.
Thank you for watching. Don't forget to like, subscribe.